Nancy Pelosi, a United States representative, just added Bloom Energy to her portfolio, an investment estimating over $12 million. I wonder what made her choose Bloom Energy. Is there something that she knows that we don't? Well, in this video, I'll be going over her exact positions, and that's including not only shares of the company, but call options as well. And if you remember, she did almost the exact same thing a few years ago with Nvidia right before it went up over 1,000%. And it ended up being her biggest trade in her lifetime. Will Bloom Energy surpass that? I guess time will tell. I'll also do a deep dive analysis on what exactly Bloom Energy does as a business, how they make their money, and how they're expected to make more money going forward. A report the other day said that Nancy Pelosi purchased 10,000 shares of Bloom Energy on July 24th. And there's no average cost listed in this disclosure, but you can take a look at the price that it was on that day, and it ranged anywhere between $214 a share to $185. So let's just say that she bought it right in the middle at $200 a share. She also bought options that expire on June 17th of 2027, and it was 100 contracts of deep in the money call options at $100 strike price. Well, Bloom Energy ended up dropping a bit more the following week, and guess what? She doubled down on not only buying 5,000 more shares on July 28th, but she also doubled down on her call options as well, buying 100 more contracts of the exact same strike price and expiration date. Keep in mind that this stock dropped well below $160 a share that day, and it went as high as $176, which will likely put her average cost at around $180 to $190 a share, which puts her entire Bloom Energy position of around $12 million. Now let's get into the why. So what exactly is Bloom Energy? Well, they're an American-based company that designs and manufactures solid oxide fuel cells, which independently produces electricity on site for power generation in data centers. They do other sites as well, but their main focus is in data centers right now. And if you didn't know, all of the big tech companies have been spending billions of dollars into building more data centers around the world. Companies including Amazon, Google, Meta, and Microsoft are expected to spend up to $700 billion by the end of the year alone. $700 billion. And the National Electricity Manufacturers Association expects data center electricity consumption to grow over 300% over the next decade. That's massive. So Bloom Energy will definitely benefit from a lot of that growth. And who knows, maybe the US government will sign executive orders to help accelerate building of those data centers. One thing to note is that the president is expected to meet up with major tech companies this week. So maybe that's one thing that they'll talk about in the meeting. I'll definitely keep you posted. But there's so many different energy companies out there. So what makes Bloom Energy so special? Well, they promote clean energy, and they developed electrolyzers for hydrogen production, holding more than 1,000 patents on how they're able to do just that around the globe. And by the end of last year, the company had built over 1,000 locations across 9 different countries. And these buildings are just not any buildings. They're all low emission, and they're all specifically built for high energy consumption. But now let's dig into their finances. First off, Bloom Energy's market cap is around $64 billion, which sounds like a lot, but they have so much more room to grow. To put that in perspective, they're not even in the top 100 biggest companies in the world just yet, with the 100th company being worth $194 billion. With that said, their revenue has more than doubled from last year, and this year isn't even over yet. But now, let's take a look at the debt. They have close to $3 billion worth of debt at the moment, which is quite a bit, but do they have enough assets to cover that debt? The answer is yes. They have $4.6 billion in assets. They also have $2.5 billion of cash on hand, with some citing upwards of $2.7 billion. Spectacular. They can cover almost all of the debt with the cash that they have on hand, without even getting rid of any of their assets. But why does all that matter? Well, because as you may know, things might not just go as planned. And if things were to escalate with the war with Iran, for example, it can possibly have a big impact on not just the biggest tech companies in the world, but it can also have a big effect on Bloom Energy as well. Mainly because Bloom Energy leverages natural gas and other fuels to create the electricity that they need. So if the price of oil and natural gas goes up, then it'll just naturally cost Bloom Energy more money to produce electricity. But that's not the only risk with this company. I've been holding this company for a few weeks now, and the stock price is very volatile. You can wake up and the stock is up 5%, then look back an hour or two later, and now it's down 2%. So if you can't stomach that volatility, then maybe the stock just isn't for you. I'm personally more in this for the long run, so I'm thinking 5 to 10 years from now, so whatever happens on a day-to-day basis doesn't really have much of an effect on me. But if you're too nervous, then hey, stick to index funds. Now let's get into the charts, but before we get into that, please do your own research. This is mainly for informational use only, and do me a favor and like this video. Thank you. But now let's get into the charts. Right now it's sitting at close to $217 a share, and its all-time high was at $351, which is about a 60% difference. So if everything goes well and it reaches a new all-time high, which I'm not too sure when that'll happen, then I'll be up at least 60% profit, which is pretty nice. But first off, before we get into anything else, if you have this platform Thinkorswim, your drawings stay active until you delete them. And when I first opened up this chart a few weeks ago, I noticed, what's all this drawing right here? And I had this charted already. I had drawings of it back when I used to day trade. So take this as a lesson. I apparently day traded Bloom Energy about 5 years ago, back when it was sitting at around $30 a share. Probably made a couple $100 that day. Well, imagine if I would have put a few $1,000s in it back then. That would have been over 600% profit on my investment. And I have similar stories about Nvidia and AMD as well. So I'm going to continue to say it, but focusing on day trading primarily is holding you back. Anyway, if you go back and take a look at Bloom Energy's all-time high, their market cap was only $93 billion. And if I believe that they'll grow as much as I believe that they will, then man, are we in for a ride. Just take a look at GE Vernova, which is one of their competitors. Their market cap is close to $247 billion. So if Bloom Energy were to reach that market cap, then their stock price would most likely be at around $837 to $840 a share, which is almost 4 times the value of where it is right now. But don't mind me, I'm just dreaming, so just let me dream in peace. Appreciate it. But back to the chart, there's a support level of around $208 a share right here. And below that is the 200 exponential moving average of around $190 a share. Expect some resistance and hesitation when it gets close to $240 a share, because it tested that level multiple times all throughout the last few months. And there's another resistance level at around the 303 mark. So if you're in it for the short term, then those resistance levels may be a good time to take some profit off the table. But with all that being said, they'll have to go through a few hurdles before reaching that $800 stock price, with the biggest hurdle being their backlog concentration. First off, a backlog isn't necessarily a sale, it's just a promise from a company. And they have over $20 billion in product backlog, which isn't necessarily a big issue, but get this, nearly 70% of that backlog is from a single business, and that business is Oracle. So all that it'll take for things to go south for Bloom Energy's future revenue is a single slip up from Oracle. Well, actually, that already happened back in July, because New Mexico rejected Oracle's energy transfer pipeline application for a second time, causing not only Oracle stock to drop, but Bloom Energy taking an even bigger hit, dropping over 7% for the day. So expect things to continue to be rocky for the next few years. But I will say I'm an optimist, and I envision other major companies working with Bloom Energy as well. And if that happens, then the revenue will continue to increase, and the backlog wouldn't be so concentrated on a single company. Another thing to consider is how long it'll take for things to get installed. One of the biggest problems that major tech companies have is how long it'll take for the data centers to not only be built, but how long it'll take for everything to be installed and get up and running. Well, Bloom Energy just introduced a new deployment system called Power Connect, and it's a system that can reduce on-site power installation time by over 40%. And they say that it'll only get better as time goes on. So for me, the pros outweigh the cons, and that's why I'm investing into Bloom Energy. But this is all risky, so invest with caution. Please do your own research and expect the general stock market to be rocky, especially with the way that things are going at the moment. With the possibility of a war with Iran escalating and the unstable bond market, things can go south at any moment. So be smart. If you made it this far in the video, then be sure to subscribe and give this video a thumbs up. I appreciate it.